The European Banking Union is the response of the euro area to the perceived fragility of banks after the financial crisis of 2008-2009. The ultimate goal of the European Banking Union is that an euro is the same euro independently of where it is produced. And if you think about it, this is the fundamental basis in which a monetary union rests. Now, before the European Banking Union, regulation, supervision, resolution of banks were dealt with independently across countries. 90% of the money we use in the euro area is produced by commercial banks. Now, for these bank liabilities to be treated equally, the banks producing them should be treated equally. That's why regulation, supervision, and resolution of banks should be homogeneous across the euro area, and this is what the European Banking Union is designed to do, to provide a level playing field for banks to operate. Researchers in ADEMU have identified some weaknesses in the design of the institutions in the European Banking Union. This has to do, among other things, with conflicts between the European Banking Union and the national competent authority. We have to understand that although the European Banking Union has taken over some competences in terms of regulation and supervision, some of these areas are also taken over by national authorities. For instance, supervision of systemic banks, large banks, is the competence of the European Central Bank. But smaller banks are still supervised by national authorities. We don't have to get alarmed. I mean, these are complex issues and these are complex solutions, and the European Banking Union is doing the job. The legislation is in place and is doing what it has to do. But the researchers have been trying to analyze this, fine-tuning them and trying to suggest possible improvements to the design of the mechanisms. Regarding recommendations to policymakers, ADEMU researchers have been analyzing the possible effects of policy and also recommending new ones. For example, if we compare how the Federal Reserve have responded to the crisis, they have programs to buy assets since the beginning of the crisis, and also they were continually in contact and coordinating with fiscal policy. This coordination with fiscal policy is possible in the euro area, and that impedes the euro area institutions to achieve as much of a response as the Fed. Another area of research is narrow banking. Narrow banking has to do with the idea of making banks hold liquid assets backing their deposits, the creation. Now, typically this idea has been criticized on the grounds that it's very onerous to banks, that it will be very costly and therefore to society too. But our research indicates that narrow banking could be implemented at zero or very little cost. Now, once narrow banking is implemented, the need for a deposit insurance scheme across the euro area diminishes because banks are self-insured against possible failures. And if we think about it, deposit insurance is the only item in the European Banking Union agenda that hasn't been developed, because it's very hard to coordinate all the insurance mechanisms across different countries in the euro area. So having banking union, implementing banking union, diminishes the need to do that.